all base metal prices on the London Metal Exchange, with the only exception actually being lead, were on the downside, and they fell sharply today, this Wednesday, as actually factory activity in China has slowed down in August across swathes of Asian and also European indicators. In China, which is the big metal consumer, manufacturing contracted for the first time in nearly 1.5 years, and we saw the copper price falling about 2% during the trading session on the LME today. However, copper prices are up still 20% this year after rising 26% in 2020. With most of the analysts being optimistic that the demand for the red metal used in power grids will increase as the world ditches fossil fuels for the electrification. Fundamentals have definitely improved in the recent weeks. That's what one analyst from Citibank said, and pointing to failing exchange stockpiles, higher Chinese import premiums, lower speculative positioning, and also expectation for more economic stimulus. Fundamentally, we think we're at the right levels. That's what he said. We see copper a little above $9,000 on the average by next year. If we look at the indicators which came out today, the factory activity in Asia has definitely lost some of its momentum, and also in Europe, but accelerated in the United States and also in Canada. Regarding some job indications, the US private employers hired far fewer workers than expected in August, but the labor market continues to recover quite steadily. And then we should definitely have a chat about aluminium today. Yesterday it rose for a seventh day to near a 10-year high, a decade high, as actually the deepening Chinese cuts raised fears of a supply shortfall. The southwestern province of Guangxi, which is one of the major metals producer, said that they would actually cut the output of energy intensive materials, which is definitely including aluminium. And that is definitely having an impact, of course, on the market. The moves are actually a response to the campaign from Beijing to save electricity and to cut the emissions in the country. We should not forget that China is producing about 60% of the world's aluminium, and the concerns about the output prompted some of the country's largest smelters to hold actually a video call on Monday, in which definitely they pledged to ensure the supply and to avoid any malicious speculation, and also to avoid any kind of irrational price surges. We should not forget that aluminium prices have rallied about 40% this year on the LME. Second actually only to tin among the 6 base metals, and Goldman Sachs and also Citigroup and Trafigura are among those which are forecasting further gains ahead for aluminium as the market moves into a deepening deficit, just as the global economic recovery gave us steam. Just a short look at the closing prices on the LME. As I said, copper lost about 2%. The 3-month price ended about $9,335. Aluminium lost only 0.7% at $2,688 a ton. Zinc lost about 0.8% at $2,981. So it's not been able to reach again the level of $3,000. Nickel was one of the biggest losers today, 1.4% minus at 19,330. Tin lost about 1.5% at 33,480, while lead, as I said, was the only gainer today which had a plus of 0.8% at 2,277. So it's going to be quite interesting to see what tomorrow and Friday will bring. Normally, as we saw during the last weeks and months, all kind of price corrections on the LME have been used for dip buyers to actually reinvest some of their positions. So that could definitely take place tomorrow or on Friday, of course depending on further economic data which will come out.